The first question I ask a trader is, "What's your broker?" When their answer is, "My broker is TradingView," or "My broker is MetaTrader," I immediately know they are beginners. But that's okay, because with what I'm going to explain today, you'll move from beginner to intermediate level. Today, I'll explain the key difference and how to avoid mistakes that could cost you money while trading. One of the most common questions is the difference between a broker and a trading platform, and especially which platforms to use. There are countless platforms available, but in my experience, you should master at least two. One of them is TradingView, without a doubt. In recent years, it has become the most popular for many reasons. It's accessible, doesn't require downloads, offers modern charts, and most importantly, allows you to add hundreds of indicators or even create your own. The other is MetaTrader. I know everyone hates this part, but there's no excuse. If you want to be a trader, mastering MetaTrader is a must. Yes, it may look outdated, but once you reach an advanced level of proficiency, especially with backtesting and automated trading, it's a platform that operates on another level. Make the effort to master it, and you'll thank me later. One of the most common problems in trading is failing to differentiate between a trading platform and a broker. Understanding this difference is crucial, as otherwise, you could end up using brokers with questionable reputations. What is a trading platform? A trading platform is software that allows traders to interact with financial markets. Through it, you can execute trades, analyze charts, use technical analysis tools, manage your positions. It's the application that displays real-time prices of various financial assets and provides access to charts and analytical resources. What is a trading broker? We've covered this before, but let's recap. A trading broker is a financial entity that acts as an intermediary between you and the market. When you decide to buy or sell an asset, the broker executes the order on your behalf. Brokers provide access to a wide range of markets, including forex, stocks, commodities, and indices. There are two main types of platforms, the proprietary and the platform's external platforms. A proprietary platform is developed directly by the broker, meaning it is 100% dependent on them. The broker provides both the platform and brokerage services, making it a two-in-one deal. However, this is a poor option in most cases because the broker's business is not focused on investing in powerful and innovative platforms, but rather on acquiring clients and generating commissions. An external platform is a company whose sole purpose is to provide an excellent user experience. They don't earn a penny from commissions. Whether the user wins or loses doesn't matter to them. Their only focus is offering the best data and the best tools for analysis. Therefore, the best combination would be a good broker that provides an external trading platform. Before we dive into which platforms those are, let's clarify the difference between brokers and platforms once and for all. As you may already know by now, there are two types of accounts, real accounts and demo accounts. A demo account is a training account with virtual money. Your gains and losses won't affect you. A real account, as the name suggests, involves real money. To open one, you need to make a deposit, and depending on your trading performance, you'll either make or lose money. The two most popular platforms you should know are MetaTrader and TradingView. Both are free. Both platforms offer the option to open a demo account, meaning with just a few clicks, you can practice trading in real-time market conditions. This is where the confusion arises. When you register on TradingView and open a paper trading account, which is a demo account, people often think that TradingView is a broker. If you ask a beginner who is trading on the TradingView platform, "Who is your broker?" most will say TradingView. But that's not correct. TradingView is a platform, not a broker. If you go to TradingView and search for any financial asset, for example, by typing euro to US dollar, you'll see an extensive list of the same ticker. In the right-hand column, you'll notice different company names and logos. Each of those companies is a broker that uses TradingView as their external trading platform. If you found this class useful and feel like you're learning from this free trading course, imagine the level of knowledge you could achieve as a student in our premium trading course. If you've ever felt stuck in trading due to the fear of losing, lack a clear system and strategy resulting in inconsistent outcomes, or even if you have experience but struggle with emotional control, preventing you from being profitable. The solution is right in front of you. The only thing missing is investing in knowledge. Stop making excuses about not having time to learn or trade, because we all have 24 hours in a day, and if you manage your time well, you can carve out 20 minutes a day to learn. You'll find more info in the top right corner by scanning the QR code on the screen and through the link in the description. Click and let's connect inside the premium platform.